Hi, my name is Swapnil Karkare, a chartered accountant and an economist, and welcome to July 2025 monthly market wrap. Most markets have rejoiced in the second half of the month as there has been more clarity on the reciprocal tariffs, and Trump has signed many trade deals like Indonesia, Philippines, Japan, EU, most importantly, and it has also granted extension to China and Mexico. So a lot of stability is there in the short term at least. Invesco writes that the new tariff rates, although they are higher than the last year, appear manageable. Costs can be shared between the people, businesses, consumers without a meaningful impact on growth or inflation. That's what market seems to think like, and it is kind of happy. Another thing that has been relaxing the markets is the quarterly results. According to Barclays report, nearly 90% of the US companies that have reported the earnings results have registered positive earnings growth better than expected at 9%. Now, with regard to the stock markets, most Southeast Asian stocks have rallied, largely because of the trade deals signed by the US. Here are the tariff rates which have been announced. As we have seen that the market has been more stable, volatility obviously will come down, which has come down this month as well. And apart from that, US small caps, Brazil, Pakistan, and UK markets have fallen this month. Now let's come to India. The earnings season is not expected to be great this time. CRISIL research projects a mere 4 to 6% earnings growth in June quarter compared to 7% in the previous two quarters. The fall can be seen in power, IT services, and steel sectors. These sectors collectively account for one third of total 600 companies analyzed by CRISIL. Sectors that have driven the growth this quarter will be pharma, retail, telecom, aluminium, and airline. Apart from earnings, the last day of this month, 31st July, made some big news. The main one being India US trade deal was not locked in and we stuck with 25% tariff rate. The markets were kind of patchy at the start of this month, and this news made them weaker. But the intraday recovery was like a beautiful thing in this entire month because it assures the resilience of Indian economy. The Nifty 50 index closed at 24,855 on 30th July, and it was just 86 points lower on 31st July 2025 at 24,768. It also went up in between the day, but finally closed downwards. Market experts say that this recovery was driven by a combination of factors like limited macroeconomic impact of tariffs on Indian economy, strong domestic buying, especially by retailers and mutual funds, and hopes that this trade deal will continue because the negotiations will go on. First is that India's export to US are small, about only 2% of GDP, so the new US tariffs won't have a bigger impact. Plus, the tariff applies only to goods and not services, where we are actually the bigger player. Indian investors are confident and continue to buy these stocks, which kind of made the market steady. There is a hope that this negotiation will continue. So overall, the experts believe that the economy is strong. Yes, there are some issues, but there is nothing new. So a lot of unknowns have gone. There are known risks, and we will probably, tackle them as we go by. Now, coming to stock market performance, most of the sectors have fallen this month. We have discussed the reasons. The main reason is the earnings growth. Healthcare has been the only sector that has given decent returns of around 3%, followed by a flattish FMCG and consumer goods sectors. The highest decline was seen in the IT, real estate, and telecom sectors. Each fell by 8%. That was followed by capital goods, PSUs, oil and gas, and banks. Let's talk about IT sector. Brokers are writing a cautionary tale for IT sectors as the uncertainty in trade and geopolitics have resulted in lower spending on discretionary items by clients of IT companies. Usually, the clients which are from diverse backgrounds, from banks to metals to healthcare, they are spending less on something like upgrading technology or installing a new tech, and that's why the IT sector in India has seen subdued earnings growth. However, the sector's medium to long term outlook remains positive according to Nuvama. The news that caught everyone's attention was obviously the TCS layoff of 2% of its global employees. TCS CEO said that the motive was not linked to AI, but it was a skill mismatch. So the TCS will continue to hire people, but only the high quality ones. The company said that it is experiencing demand contraction, and that is due to the continued uncertainties around the world. The management does not see a double digit revenue growth this fiscal year. Infosys CEO has also expressed some caution while saying that economies worldwide are becoming more stable, but things have not yet settled. Now let's move on to bond markets. Apart from Russia, most large countries saw bond yields go up in the month of July 2025. India's GSec yields were almost flat this month. However, on a YTD basis, the yields have gone down by 42 basis points. Currently, the 10-year GSec yield stands at 6.373%. However, if you see 2-year GSec yields, they have dipped by 96 basis points. This is due to 100 basis points rate cut by RBI. From January to June, inflation was down by 3%, RBI has cut repo rate by 1%, fresh FD rates have fallen by 80 basis points, fresh loan rates are down by 63 basis points. This tells us that monetary transmission in the economy is working well. Now, what is monetary transmission? It's how RBI's decisions like cutting interest rates affect everything else in the economy. It's like a ripple effect. RBI lowers the repo rate, banks can now get cheaper loans from RBI. That cheaper loans are translated to cheaper loans to banks' borrowers. So people like us or businesses can borrow cheaply from banks. Then at such times, banks don't need high cost deposits. They lower their cost of deposits and the FD rates come down. So in general, people start to borrow more, they spend more, and economy is boosted. That's theoretical explanation. Practically, things might differ. For example, bank loan growth has not been promising this year. That is because last year there was like a super strong growth, 20%. That means we have a very high base. Big banks like HDFC, ICICI, and Axis have reported slower loan growth in FY26. Banks are being careful because they are worried that people are not repaying their loans, especially personal loans and microfinance. Plus, urban economy is going through its own challenges, and that is also kind of hindering the loan growth. But they believe that the loan rates are lower, the repo rate is also lower, and this year, festive season can be a good period because there can be a pickup in credit demand. So, all in all, RBI has done its job that the rates are lower, the yields are lower, and there are pretty much good signs that things might improve. So, let's see what happens. Now, let us move on to commodity markets. First, oil prices. In July, oil prices surged due to mix of reasons. First, fresh sanctions by European Union, supply disruptions, logistical bottlenecks, and demand from China, all of which created kind of tightness in the market and the prices are going up. European Union introduced 18th sanction package on 18th July, significantly lowering the price cap on Russian crude from $60 to $47.6 per barrel. This cap prevents EU firms from offering essential services like shipping, insurance, and financing to buyers of Russian oil if it is sold above the cap. So the oil should always be sold below the cap so that they can get these facilities. In addition to this, EU has also banned refined fuels from Russian oil even if it is processed elsewhere like in India, UAE or Turkey. This has hit India's refiners because India has been a major exporter of diesel and petroleum products to Europe because we are using discounted crude oil. We can use them because we are not under sanctions. Other countries which are under sanction cannot use this oil. In FY25, India exported $14.3 billion of petroleum products to Europe. We used to get a discount of $10 to $16 per barrel, but now the discount has kind of gone down to 2.5 to $4 per barrel. So that means Russian oil are now having fewer buyers, and there are more hurdles which kind of push the Russian Urals price higher. Russian oil is called Urals. Now on the demand side, China has been buying crude oil in large quantities. Chinese refiners ramped up processing with refinery running 15.15 million barrels per day in June, the highest in the recent months. Beyond active refining, China has also built up its strategic oil reserves by adding 1.3 million barrels per day. Then there is another less visible but an important factor on Russia's use of shadow fleet. Now, what is shadow fleet? Western countries have imposed strict sanctions on Russia to reduce its oil revenue. But Russia has found way exporting oil despite these regulations by using large group of old, poorly regulated oil tankers known as shadow fleet. These ships operate outside of the normal rules without they have no proper insurance. They don't have safety checks and even national flags. They are hard to track and owned by shell companies in places like Dubai. So it becomes very difficult to hold them accountable. Many ships transfer oil between each other in international waters so that they cannot come under anyone's eye. They also use fake identification numbers and spoof their locations. Some even sail under different flags. Because they are old and not properly maintained, these ships pose serious environmental threat as well. In short, what has happened is that these shadow fleet has helped Russia bypass sanctions and keep its oil exports going on forever. Now that shadow fleet has led to price rise because EU has sanctioned over 400 vessels in this network. They have blacklisted them. Therefore, now Russian oil deliveries are becoming more expensive because there are more hassles. Lastly, there is another reason why crude oil prices are rising, and that is because of drone attacks on Iraqi oil fields. According to a report, oil output in Kurdistan region has been slashed by 150,000 barrels per day, which is more than half the region's normal output of 280,000 barrels per day. So many things are happening this month. Now, let me talk about lithium. Lithium prices are also going up because China has ordered ban on a mining company which is called Zhangye Mining because they want to stop illegal extraction of lithium. This sudden halt has made investors worry about lithium availability in the global markets, and that's why the prices are going up. Now, there is another metal which I would like to talk about, and that is iron ore. Iron ore prices has also rose sharply in July, mainly because of renewed optimism from China's economy. The surge is driven by expectations that China has announced certain policies, new stimulus measures, and that will boost steel demand. And due to steel demand, iron ore prices are also going up. One major announcement is the hydroelectric power project on Yarlung Tsangpo River. Now, have you heard of this name? This is the same river which comes to India and it is called as Brahmaputra. So this project involves over 1.2 trillion yuan of investment and it aims to generate 60 million kilowatt of power. It will become one of the largest hydroelectric power projects in the entire world. Now, this large scale damming project will kind of make problems for India and Bangladesh. Particularly for India, first reason is the control of water flow with China, which kind of becomes like a security issue. And second is the ecological problems. There are very sensitive spots around that area, for example, Kaziranga National Park, and we can lose biodiversity also in that region. So a couple of these points are there with this development, but the main point for our market wrap is that the iron ore prices are going up. So this month I have decided to, little bit change this market wrap and talk only about market rather than talking about different news items. Let me know what are your thoughts about this thing, and do follow the channel, subscribe to it, press the like button, share this across with everyone, and keep following and subscribing. Thank you, and see you soon.